QuickBooks Online 2021. How accounts are sorted without account numbers. Let's get into it with Intuit's QuickBooks Online 2021. Here we are in our QuickBooks Online account numbers practice file. In prior presentations, we set up the practice file, and then we're taking a look at our chart of accounts on the left-hand side. And then we set up our account numbers, but we have not added any account numbers at this point. I'm going to close up the hamburger. Now, in order to understand the account numbers better, it's good to first think about, well, how are the accounts sorted without account numbers? And then what will the account numbers do? What kind of added functionality will the account numbers have? So we, in essence, have our chart of accounts without account numbers, except for we added this one 6,000 down here. We'll probably change that later, but that'll give us a good example of what we have thus far. So first, you want to be thinking about the order of accounts, and you want to first think about the order of accounts by account type with regards to QuickBooks terminology, or you want to think about it in terms of basically the balance sheet on top of the income statement. That will be the case. That will be the primary sorting of the chart of accounts, whether you have account numbers on or off. And then the account numbers can add some added level of sorting within that categorization. Now, note that the default here will be to sort by account type. Now, you might say, well, yeah, but I can't sort by name. I could sort by account number if I want to. And you could, but you want to kind of think about it in terms of the account type. There's a reason it's sorted by account type, because that's how the financial statements are grouped, balance sheet on top of the income statement. So although you can sort on the chart of accounts by account number or by name, the chart of accounts in practice will still be in order by basically account type, because they're going to be used to create the financial statements, which are in order by account type, meaning balance sheet, and then the income statement. So how you first want to think about it is balance sheet on top of the income statement. The balance sheet includes assets, then liabilities, then the equity section, assets, liabilities, and then equity, and then the income statement, which is income and expense type of accounts. Then within those categories, we have more detailed categories, including cash, then accounts receivable, then other current assets, and so on. So let's go through it and just add a couple of the gaps here so we have an example of each kind of account type category. So we don't have a cash account yet, so I'm just going to add some of these as we go. I'm going to say, let's add another account. Let's call it the bank account. It's going to be a checking account. That'll be our standard checking. And I'll add this, and this is an asset type of account, standard checking type of account. I'm not going to add the numbers yet. We'll just add those in our grouping. Notice where it adds that right up on top. That'll be our first account, because not only is it cash, but it's the most liquid account. Then we'll typically have an accounts receivable type of account. It has a separate type, not for financial accounting normally, but for QuickBooks it does, because it has an added level of functionality necessary to create subledgers for it, meaning reports that are grouped by customer. So if I go back up top and say, let's add like another type of account, notice the order that we have up top. We got the bank account, we got the other current assets, we have accounts receivable, fixed asset, and then other assets, accounts payable, credit card, liabilities, and so on, and then income and expense and so on down below. I'm going to add an accounts receivable type of account. Normally we just have one of those, one accounts receivable type, and you might have an allowance account as well. So notice it's right underneath the cash because it's a little less liquid, but still up top. And then we've got the inventory. This is an other current asset type of account, kind of a special other current asset, because we're tracking, our inventory items. We might have something like prepayments up top, like prepaid insurance. So let's just add one of those just for the fun of it. We're going to say we might have a prepaid type of asset. That's going to be an other current asset type of account. And I'm going to call it a prepayment of some kind. So we're going to say this is accrued or prepaid. So we'll say prepaid expense here, and I'm going to say, okay, prepaid expense. And so now we've got the prepayment. Notice that the inventory items here are in order. We're in order by type, other current assets. So inventory is going to be before the prepaid, because now we're talking in the same category, it being ordered in alphabetical order within the category. In other words, note that the accounts receivable is not above the checking account, and that's how it's going to be on the balance sheet too, even though they're both asset type of accounts, because the checking account is an account type that's going to be more liquid. So it's going to be the checking account asset type, then accounts receivable. Then with the other current assets accounts, it's in order of of alphabetical order within that categorization. Then we have uncategorized assets, undeposited funds, other current asset type of accounts. Let's add a fixed asset type of account. So let's say, okay, let's add a fixed asset type of account. We're going to say now this is going to be a long-term type of asset, depreciable assets, property, plant, and equipment type of asset. And we could say, let's say it's going to be furniture, fixed asset furniture. Let's say fixed asset, other tools and equipment. Let's go with the furniture. So I'm going to say save it. So now we've got the fixed asset that will be included in here. Again, it's another asset included in order by type. We might have accumulated depreciation related to it as well. Let's add another fixed asset, which would be typical. Fixed asset, we're going to say accumulated depreciation, adding that item. So now we've got two fixed asset type of accounts. And then we might have some kind of other asset. We saw, notice within here, it's still in alphabetical order. And this is one of the problems because these are both in alphabetical order, but it put accumulated depreciation on top because within that category, then the A, of course, is first in alphabetical order, even though we would like it to be in the reverse order. And that's where the account numbers can basically help us out. That's where we would have control. So let's go up top again. Let's add another one and say, let's add then an other asset, not as often used. And we're just going to say that the other asset, let's say goodwill, and we'll say save it. So it's not a current asset, but now an other asset down here under the fixed assets. Then let's add some liability type of accounts. So I'm going to go liability type of account. Second category on the income statement in general, the big categories. Now, the current liability or the big liability account is accounts payable. So we'll say accounts payable. It is a current liability, but like accounts receivable, it has like a special need within QuickBooks to have a subledger. Therefore, it's got its own categorization, and that's usually the first account, the first liability account. If I add another one, we're going to say then we typically have other current liabilities, and other current liabilities could include things like a loan that could be accrued or accrued interest or something like that. So let's say we have a loan payable. Well, a loan payable could be current or long-term. Let's say it's like sales tax payable or something like that. Or, we'll say sales tax payable. We'll add that. So now we got an other current liability that's going to be in order. So now we got accounts payable and the other current liability in order by type. And then if I go back up top again and say, okay, let's do another one. Let's say we have a long-term liability now. And let's say this is notes payable. Notes payable. Notes payable could be current or long-term. If it's over a year, something over a year that's going to be due over a year, then it's going to be long-term. You could have a current and long-term portion to a notes payable. And we may talk a little bit more about how to deal with that in the chart of accounts. Because, but in any case, there it is long-term. And then we've got the equity accounts. Now we're on the balance sheet. Last section, we got the opening balance and then the owner's investment and the owner's pay and then the retained earnings. Now the retained earnings is going to be something that might be the term if you were to be using a corporation. They start off with retained earnings no matter what because that's the earnings that are retained in the business. But if it was a sole proprietorship, you may edit it and say, instead of calling it retained earnings, you might call it like owner's equity or possibly a capital account. Owner's equity or maybe a capital type of account. Owner's equity. I sometimes like to just call it the capital account, but owner's equity is probably more common for a sole proprietorship type of account. And then you have the income statement. So now we got the income statement below that. Income type of accounts, sales being one of the common income statement if you sell inventory items, or sale of product income. Sale of product income here. I'm not sure why we need multiple accounts for that. If you do have multiple accounts, you could say I want to remove some of those accounts. Maybe I don't need two sale of product accounts. So you might go back on over here and say make inactive. So I'm going to make it inactive and say okay. So now we're going to go down and say we got an income account. So we got billable income. Maybe I don't need this billable item either. I'm going to say let's make that inactive. I'm going to scroll back down and say another billable item. I'm going to say make that inactive. Make inactive. And then now we've got the sales and sale of product income. We got the uncategorized income. That's kind of their default item. Cost of goods sold is going to be the next category. This is basically an expense, but it's going to be first before all other expenses because that's the expense related to us selling inventory. And then we have all the expenses down below. Now, the expenses are the longest category of types of things that we typically will have. And this is where the account numbers have a lot of control on the expense categorization because within this category, you can order it by account number, as we can see up top, and that can give us a lot more control over that long, grouping of accounts, which all have the same account type. Let's go ahead and just add a couple things to our numbers now. Let's add some data. So we're in the chart of accounts now. So I went into the chart of accounts. I'm going to add a deposit. So we're just going to add some numbers into it. As of 010120, we'll add a deposit. And I'm just going to do this fairly quickly just so we have some numbers that we can sort in the report. So I'm going to say the deposit's 100,000. Other side, I'm going to put into the equity account, which is a balance sheet type account. I'm basically making then our income statement. So I'm going to call this owner's equity. So the owner's equity account. So let's add that. That'll increase the cash and increase the equity. Now let's add some expense type forms, and this will be decreases to the checking account. So I'll make this on January 5th. And I'm not going to put the vendors because I'm just going to do this fairly quickly. Let's say we had one for let's say 1075, and let's add an account here. I'm going to go to the expense accounts. Let's say that was utilities. So then I'm going to say save it, and we'll just add a couple more. And let's say that the next one is going to be advertising, and let's say that was 6,000 or 6,000 for the advertising. We could do 6,000, and then I'm going to save that, and let's do another one and just add some of these items. I'm going to say this is going to be ask my accountant, no bank charges. Let's make that 190. We're going to save that, and then we'll do another one and say that the account will be the car and truck. Let's make that 12,000 car and truck, saving that. Do another one here, and we're going to say that this is going to be contractors. Let's make that 25,000 for the contractors, saving that. And then we'll make another one, and this is going to be for the insurance. Let's make that 3,400. And then we'll do another one, and this is going to be for interest. We'll make this 120, saving that. Then we'll do another one here, and this is going to be for the interest job supplies. Okay, we'll make that 19.5 job supplies, saving that. And then we're going to say that we have another one for legal and professional, 570. Let's put another 0 there. And we'll say save that. And then we have legal and professional meals and entertainment. We're going to say 7800 on the meals and entertainment. And then let's do the next one, meals and entertainment. We have then office supplies, 12,000, saving that. Next one, we're going to go on down to other business expense, purchases, reimbursement. Let's say rental. I'm going to say that is 31,000 for the rental, saving that. And then we'll say next item, rental, and then repairs and maintenance. Let's say that that's going to be 4800, saving that. We're in the negative now here, so I'm going to say next item on the rental. So let's say rental, repairs and maintenance, taxes and licenses. I'm going to say that's going to be that, and we'll save that. And then we've got taxes and license and uncategorized. Okay, there we have it. Now on the accounts receivable, we might make an invoice to hit that. Inventory asset. We could add that, but let's add that directly. Now, normally you would, if you're tracking this within the system, you would be using an inventory account and using a perpetual inventory system, but I'm just going to add this for now. Inventory. And then let's see what else we can just populate our accounts here. We got inventory prepaid. Let's do the prepaid items. 12,000. All right. And then what else do we have here? We got prepaid, uncategorized, undeposited, accumulated amortization, the fixed asset. Let's say the furniture and fixture. Let's say that is 18,000. That's the fixed asset account. And then we've got furniture, goodwill. Let's add that at, let's say that's 20,000 goodwill. That probably wouldn't come out of the checking account here, maybe, but anyways, goodwill. And then accounts payable, sales tax payable. Sales tax payable, let's just add that here, just to put it on the books. This would generally come from an invoice or sales receipt, but we'll put it on the books just to have something in there. On the sales tax, note payable, let's put that on the books. The note payable should be going the other way. I'm going to cancel this. I'm going to say that this is going to be a deposit this time for a note payable. Let's make that for 150,000, and this is going to be notes payable. Notes payable. So we'll save that. So there we have that. I'm also going to add an invoice and a bill to populate the accounts receivable and accounts payable. So I'll add an invoice here just to put something in the accounts receivable. I'm just going to call it customer 1. So this is going to go to customer 1. Customer 1. So we'll set that up. I'm going to say the date is going to be 01/15/20. And then this, I'm going to set up an item 1 tab. And it's going to be a non-inventory. Let's make it a service item. Just going to be called item 1. So item 1. I'm not going to put a sales price here. The sales account's going to be the other side. And so now we're going to increase the sales account. So that's fine. And I'm going to say save it. And let's say, and I'm going to make this quite large. I'm going to say this is for 100,000 for the sales. And then we'll say save and new. And let's make another one for customer 2 now. So customer 2. So now I'm going to say customer number 2. And then save that. And we'll make this on the 16th. This is going to be inventory item. So I'm not going to track the inventory, but I'm going to make it a non-inventory item. Meaning we're not doing a perpetual inventory system. And then I'm going to put this into sale of product. And we'll save that. And let's make this for 75,000. And we'll save that. And then I'm going to add a bill so that we have something in accounts payable. So let's go to the new. I'm going to say bill. And we'll add a vendor here. I'm just going to call it vendor 1. Vendor 1. Saving that. And we'll put this down here is going to be the category of, we're going to say category down below. It's going to be some type of expense typically, or maybe we buy more inventory. I already have a lot of inventory on there, didn't I? So let's just say that it's going to be other or miscellaneous expense. Miscellaneous expense, we'll add another one. And this is going to be miscellaneous, other business expense, miscellaneous, save it. And let's say that this is going to be for the amount of 15,000. Okay, and then we're going to say save that, save and close. Now let's take a look at our reports and see what we have on them at this point. I'm going to say let's duplicate this tab, right click on it and duplicate it. I'm going to do it 2 more times, right click, duplicate, and then right click and duplicate. And we'll just basically open it up our reports now so that we just have some numbers in it, looking at the major reports, balance sheet, income statement, and then possibly the trial balance is the other report that I think is useful to look at. Let's actually start with that one. Well, let's start with the balance sheet on the first tab here. I'll go to the reports on the left-hand side. We'll open up the good old balance sheet. It should be up here in the favorite reports. So we'll open up the balance sheet report, changing the dates up top from 01/01/20 to 12/31/20. Run that report, close the hamburger, and now we've got our information populated here. We could see our numbers populated and how that's formatted. Then if we go to the next tab on over, we're going to open up the income statement. So we'll go to the reports down below and then open up the good old income statement, the profit and loss. And this is going to be from 01/01/20 to 12/31/20. Run that report. Next tab on over, let's open up the chart or the trial balance. This is a less common report used often by accountants, but it really gives you an idea of the ordering of the accounts. It'll look a lot like the chart of accounts. Same date range up top, 01/01/20 to 12/31/20. Run that report. Close in the hamburger. Now you want to think about this balance sheet on top of the income statement. So if I look at the balance sheet, here we have it, and notice every little drop-down category, that is based, or these drop-downs, that's the account type. So we have the banking account drop-down category, then the accounts receivable, and then other current assets, and then the fixed assets down here, and then the other assets. That gives us our total assets, top part of the balance sheet. Then liabilities by account type of accounts payable, then other current liabilities, then long-term liabilities. That's all the liabilities. Then we get to the equity, last part of the balance sheet, and these are the accounts in the equity section. Then we have the income statement. Income statement includes income, and then the expense categories. Now, cost of goods sold would be one of the major expenses. We didn't add a cost of goods sold yet, so we should put one there. But cost of goods sold, and then all other expenses usually be in the long category. This is where you have a lot of control with the account numbers. And then if you go to the to the trial balance, you can see this gets rid of all the subtotals. And if you can understand this report, it's a lot easier to look at, where you have the balance sheet, assets, and then liabilities, and then equity on top of the income statement, income and expense in the same report.